important to mention India's largest private lender, HDFC, came out with its results last evening. Suyash, run us through the numbers.
Yes, I mean, Shweta, having had some time to look at the numbers, sit with the numbers and read the management commentary, to me at least it seems that the results are better than what the street was factoring in, or at least better than, what the management commentary had suggested a month ago, during its analyst call. Now, before we talk about the numbers, it is important to point out that the Q2 numbers are not comparable on both year-on-year basis as well as quarter-on-quarter basis, because these results are of the are after the merger of the entity. So these numbers will not be comparable, and also both the banks like HDFC Bank and HDFC, the business model was different. So A plus B does not necessarily makes it AB. It could be C, right?
Okay. So let's quickly get in Mr. Baliga on that as well. Mr. Baliga, over the last 12 hours since HDFC came out with its results, we have seen comparisons being made in the media itself. Would it be fair to say that such a comparison is not warranted, given that this is a merged entity and you're talking about results of individual entities as of last quarter? Is there even a room for comparison?
No, I really don't think there's much of a room for comparison because 1 plus 1 here does not really mean 2, especially in the initial period when the merger is going through. Because end of the day, it's the people and the systems which are being merged. And typically in such cases, especially when we're talking of the larger companies, there is some amount of slowdown because there are changes happening within the system. So at least for 2 to 3 quarters, you'll see some amount of slowdown. So 1 plus 1 will be less than 2. But then post that, you'll actually see the performance happening. So I think one needs to wait for at least 2 to 3 quarters to really see performance from HDFC Bank.
Okay.
And the other thing which I would like to add out here is that always when you look at the quarterly earnings, it is always expectation versus delivery. So here, I think the expectations are set right by the management about a month back when we had the conference call, and the expectations are decently low. I mean, it was reduced, and because of which we saw the stock correcting also decently well, and the earnings were better than what we had expected. So that's one of the reasons why we're seeing quite a few of those positive notes coming from the brokerage houses.
Now, Shweta, let's quickly run through the numbers. Now, net profit came ahead of the street's expectation. The street was factoring in a net profit figure of about 14,780 crores. This time around, the profit came in at 15,976 crore, which means it's 8% higher than what the street was estimating. Now, net interest income came in lower, which by about 2.5%. The street was factoring in somewhere around 28,089 crores, whereas the number net interest income stood at 27,385 crores. Now, looking at the other numbers as well, the total loan book stands at 23.5 lakh crore, which on a pro forma basis is about 4.9% higher, meaning if we add HDFC and HDFC Bank directly. Total deposits, on the other hand, were up sequentially by 5.3% to 21.73 lakh crore. Now, net interest margin, Shweta, came in at 3.4% compared to the long-term average of 4%. Now, reading into the management commentary, the management said the dip was largely due to the higher cost of borrowing for the HDFC Bank, and over time, once the high cost debt is retired, the bank will replace it with retail borrowing, and then the NIMs will improve. Also, gross NPA stood at which came in at about 1.34%. The management said that around 22% of this portion is from the performing, as well as they were reclassified as NPAs, but these assets are performing. So if we remove that effect, it's pretty much around the last quarter's earning. So I mean, as Mr. Baliga, you said that the results are better than what the street was factoring in, but I'm looking at this net interest margin figure of 3.4% versus the long-term average of 4%. After the management commentary, when do you expect that this normalization to happen? When do you expect the bank to finally get to that 4% mark?
See, this NIMS also fell because of the merger. And I expect, at least as far as HDFC Bank is concerned, the NIMS can move up a bit. I don't think they'll move back to 4%, but I think they can move up about 0.3, 0.4, maybe in the next 2 to 3 quarters. That's why I said I think we should wait for those 2 to 3 quarters for the performance to really show up.
And what's your take on the stock, sir? The stock is up about 1% this morning. It has been
Right.
consolidating around 1530 mark. So good bit of a movement there.
I don't see a major move in HDFC Bank, but as far as the like downside is concerned, I think that's over. So if one has enough amount of patience, then one could look at buying it at this point of time. Otherwise, there's no hurry to buy. But then, as far as the long-term portfolio concerned, this is a good stock to hold on.